There are three main kind of emerging technologies that we think have the potential to be big disruptors in financial services and what happens in financial services. The first of those is blockchain. It is the technology that supports Bitcoin, and it has a potential to disrupt large parts of financial services. And it's something that we're very focused on, and we're building our capability around that at the moment. Second technology is slightly different. It's called robotic process automation, or robotics. And it has the potential to automate a lot of, I suppose, lower value manual activity that currently happens in financial services today. And you hear terms like bots and robots used widely around it. It's not a particularly kind of emerging technology. The technology is actually quite a proven technology, but how it's applied is quite different. And then the third area that we see as a kind of a very disruptive technology that's really coming out of the gates at the moment is artificial intelligence and machine learning. And again, you get into kind of robot kind of analogies as well. So things like robo-advisors become a significant example, I guess, of how artificial intelligence is being applied in financial services. Generally, when you look at what's going on outside of financial services, not just within financial services, you see the impact of digitization and digital technologies on a whole range of different businesses. And I suppose one of the kind of interesting kind of trends that you see is how quickly these businesses grow, become global. So everybody's probably familiar with things like Uber and Airbnb, and these are businesses that over a relatively small amount of time have become massive global businesses with massive valuations attached. And in a similar way, there are startups who have managed to scale quickly in the financial services area. And we're going to see more and more of those as kind of fintechs, which is the name for these type of startup companies, become more and more successful. Some examples of those globally include companies like Wealthfront, which is a robo-advisor out of the west coast of the US. So again, this is something that basically provides what traditionally has required human portfolio managers to advise you on your portfolio of investments with what is an automated solution to managing your fund, your investment, your portfolio, part of which is based around artificial intelligence. So they've taken the investment experience out of some very seasoned investors and translated that into software and into a robo-advisor offering. Another example of it from an Irish perspective is a little bit more traditional, but it's more in the regulatory technology space, is a company called Fenergo, which has built a very strong solution around KYC, Know Your Customer, and anti-money laundering. And they are scaling very fast. They recently got an investment of 75 million, which is pretty significant by any standard, but particularly from an Ireland perspective. The scenario we were painting was where potentially the adoption of these technologies, the use of these technologies accelerates much more quickly. The significant job losses occur. And what has happened up until now, I guess, in similar situations is that other jobs have emerged on the back of automating certain things. The potential hyper-disruption scenario is based around the fact that we're not able to, or don't have sufficient talent in the tech space really to fuel the fintech companies and startups that might replace some of the jobs lost in the traditional financial services space. So the scenario that we talk about there is really dependent on the availability of talent, and particularly science, technology, engineering, mathematics kind of talent, and the fostering, I guess, of that kind of startup environment. When you look at the kind of things that humans do that can be, imitated by robots effectively, I mean, clearly there's no point in kind of training people to do those kind of jobs, continue to train people to do those kind of jobs, give them the skills to those. What are the things that are inherently human that, technology can't do? So things around creativity is something that you can't really build into a robot, certainly not now in terms of artificial intelligence and those kind of things. So trying to understand where there's opportunity more broadly to bring creativity, whether that's in digital marketing, those kind of areas, as well as obviously the ability to build the technologies themselves that drive the automations. Firstly, I mean, for large financial services organizations that have very large numbers of employees that are constantly under pressure to reduce their costs, they're going to look at how they can use these type of technologies to automate more of what they do. And there's kind of the two things within that. Basically, I'd break out our robotic process automation, which is really kind of having a software robot mimic what a human person does in terms of taking information from one system, considering it and maybe putting it into a different system. So the technology exists today to just automate all of that with a bot. The other piece, though, that's kind of interesting is where there's kind of significant, more intellectual activity required to complete a task, and that's where the artificial intelligence kind of piece kind of comes in. And you touched upon robo-advisor there. So robo-advisor has the potential to not just automate the front-end portfolio management activity in the investment management space, it also has the potential to take out large parts of the sales forces of financial services organizations. You don't need the mortgage advisor, you don't need the pensions salesperson, because a lot of that activity can be built into a robo-advisor, an automated solution with a degree of intelligence to be able to go through the same kind of advisory process with customers. So both of those have a potentially very significant impact in terms of taking out large amounts of kind of workforce, and I think that's where the potential impact will be in financial services. And I think the thing that we were pondering in our report was really how quickly that might happen or how slowly that might happen. It will happen. It's just a question of at what pace. Well, clearly, given the degree of technology, digitization, automation, there's a large opportunity around the skills that are required to deliver that automation, to help change businesses in that regard. Clearly, there's a lot of activity to create businesses that will compete with traditional financial services by using that technology. So fintech startups, fintech kind of ecosystem has the potential to kind of create significant new jobs, new roles, new employment. I think within the large kind of global financial services organizations, all of them have to address this automation challenge. They need to create centers which are capable of building that technology, delivering that technology. So potentially there's a role for Ireland to be the location for that capability, for those resources, for those centers. So there's opportunity there. And then, as I said earlier, I think one of the interesting things is trying to understand longer term what are the roles, the activities, the tasks that technology won't be easily able to automate. And that's where when you get into things like creativity, or where there are very, very complex kind of tasks, they're the ones that are likely to remain, I suppose, carried out by humans as opposed to software.